Hello, everyone, and welcome to the EGOS workshop. I'm your host, Thomas Wood, and today we are going to be getting started. I'm really excited to be talking about this. I know there's a lot of you are excited to be discussing it as well. And with that being said, my headphones just died on me. So, way to start the workshop off on the right foot, right? Before we get started with any of the good stuff, though, and dive in here, we have to go through the risk disclaimer. Just keep in mind, trading or investing carries a high level of risk and is not suitable for all persons. Just remember, there is always a chance of loss with trading. There's no such thing as a risk-free trade. Also, with that being said, only trade with money that you can afford to lose. So it's not something you have set aside for anything else. You don't want to go take your son or daughter's college fund or go and refinance your house or take your only retirement money and trade with that. You want to only trade with risk capital. Twofold reasons. A, if you do lose it, and it's risk capital, no big deal. But B, if you are not trading with risk capital, there's going to be this huge burden on your shoulders as a trader that you have to be right. You can't make a mistake. You can't mess up. And it's going to make it that much harder for you to be a consistently profitable trader. Then along those same lines, we're required to show you CFTC Rule 4.41, just hypothetical disclaimer saying, look, past performance is not necessarily indicative of future results. There's no guarantee that anything we talk about here is likely to happen again in the future. And it's purely hypothetical that it will. That being said, I trade these setups and everything almost every single day myself with my own money, and I wouldn't be doing that if I was consistently losing money with them. So, with that being said, let's dive in here. What is the workshop? What's going to be covered tonight? Because this is the workshop for EGOS, which stands for Explosive Growth Options and Stocks. So the sections we're going to be discussing first is actually going to be kind of some general EGOS rules, just some general trading rules that we follow with this type of strategy. But then we're going to dive into what makes an EGOS trade an EGOS trade, because not every single trade we take is a potential EGOS opportunity. And then we're going to talk about what are the three main EGOS setups. There's really just three types of trades that we take and three setups that I use. And we're going to just dive into those in depth and in detail and talk about, okay, what makes them good? What makes them bad? Where do we time our entries? Where do we place our stops? How do we start to scale out? How do we determine targets? All that good stuff. And those three setups are compression breakouts, bull and bear flags, and head and shoulders / inverted head and shoulders patterns. All right. And you're going to see some similarities to them as I break them down and become a little bit more specific with what exactly we want to see with each one of these setups. Then we're going to talk about trade management. Again, when do we know the trade's wrong? When are we getting out? When are we getting in? Where's our stop going? Where do we start scaling out? When do we start taking off partial losses and then full loss, or partial profit and then full profit? All that good stuff. Then we'll also dive into a section on trading options versus stock and selecting when we want to trade options, when we want to trade equities, and then how do we determine what expiration and what strike price to use for these. Also, with that being said, there's going to be a final section that discusses the scanner and how we use the scanner. I don't have that on the list here though, but what we look for, how, and I'll pull it up and run you through it on TradeStation, and it's the same way on TOS. There should be a whole PDF for how to set that up and everything already available. So, with that being said, a question that's coming through here is there a PDF already posted with all the slides, or will that come out in a couple of days? That'll come out in a couple of days. I sent the PDF of the slides to Brian the other day, but he hasn't had a chance to get it out to everybody yet. So you will get a PDF of all these slides, just not yet. All right. Yeah, there's a whole video that shows how to install and set up the scanner for those of you that have the scanner already. John put that together for you. All right, so let's go ahead and dive in here with section 1, which is kind of the general EGOS rules, what they are and how they work. Now, remember, as I said before, if you have any questions at any time, feel free to ask them. I will not intentionally ignore anybody's question, okay? However, there's a lot of people in here. So if you do ask a question and I don't answer, it's probably because it just got pushed off the screen and I didn't see it. All right, so just ask it again. And ask it again and ask it again. I'll answer all the questions if I see them. Alrighty. So some general EGOS rules here for these types of trades that we want to be following. All the analysis for EGOS trades, I try to do it very, very simple and keep it very easy. So one of the things I do in order to keep it simple is I don't look at multiple time frame analysis or anything. Now you absolutely can drill down like 5-minute charts and time entries and stuff that way. There's nothing wrong with that. But when I'm trading EGOS trades and the ones that I'm posting in the trading room and the alert section and stuff, unless I specify otherwise, they're all based off of daily price charts. All right, we do not have to drill down to smaller time frames. All my analysis, when I'm looking for opportunities, when I'm looking for potential setups, that is all done on a daily price chart. Okay. So with that being said, keep it simple. All right. This is one of the simplest strategies you can use. And keep it that way. Do not overcomplicate it. And I know there's a tendency for people to overcomplicate it. And that brings me to the next point. I don't pay attention to any of the options Greeks. All right. This is one that everybody asks me. Thomas, what about the Greeks? What delta calls are you trading? Or what about the time decay? What about this? What about that? I don't pay attention to any of it. And everybody says, I can't believe you're not looking at that. You're typically doing this. You're typically doing that. You have to be paying attention to it. I do not. I don't look at the Greeks at all. I'll explain to you later on how I determine which strike and expiration to trade. Again, keep it simple. We don't need to pay attention to all that. We're trading based on price action momentum. All right. And then we use fundamental catalysts to make it really move. Now, again, we keep the strategies very, very simple. And because of the nature of the trades that we're taking, as I told you earlier, there's 3 main setups. And one thing you'll notice about all of them as we go through them is they should move our direction very quickly. So what do I mean by very quickly? I mean, they should move our direction within 1 to 4 trading days. We should be hitting our targets. Typically, I want to be hitting my first target the same day I'm getting in. All right, and I'll talk about what that target is and how it works. Now, one thing I do personally, I do this all the time. I get out of trades a little bit early. I mean, shame on me, leave a whole bunch of money on the table, but I'll explain to you what the rules are and how to follow them. If I had followed them, for example, today, I probably left 10 grand on the table, getting out of Tesla too soon. So keep that in mind. I'll explain how to get out and everything, but the market should move your direction very, very quickly is the main key there. Now, also, EGOS trades are essentially breakout trades as markets are coming out of compression. All right, this is important. You need to understand the type of trade it is, the nature of the trade that we're taking. When we are trading an EGOS position, we are seeing an expand. We're getting in at the start of an expansion phase. All right, when markets move, they don't just go straight up or straight down. I mean, sometimes they do, but 99% of the time they don't. The way that they move is they'll go expansion, and then they'll kind of chop around, and then they'll go expansion again, and then chop around, and then they'll go expansion again. All right, when we are trading EGOS trades, we're catching that move there or this move here. We are not trading inside of this compression. So this is important that you understand where we're looking to get in right as we come out of compression, because this happens way too often. People want to chase. All right, and you hear me saying this in the trading room almost every single day. Don't be the bag holder, okay? Do not chase the trade. If you miss the original breakout entry, there's typically going to be a secondary entry that you can jump in on, which is what we call the first flag, and we'll talk about what that setup is, how it looks, etc. However, if you miss the trade and you miss the flag, do not get in late. Do not get in when we're taking profits. If I'm sitting here saying we're taking first profit off, don't be asking the question, hey, Thomas, is now still a good time to get long? If I'm saying we're taking off partial profit and you're going, can I get in? There's a problem. You're chasing. All right. Do not worry about missing an opportunity. There are plenty of opportunities that you can miss and that you will miss and that you're going to miss. Okay. Hundreds and hundreds and hundreds of them or thousands of them over your career in trading. So if you miss, do not chase it. I cannot stress this point enough. Again, I get asked every single day, people looking at a market that's already had a huge run and they're getting in at the tail end of the expansion phase and they're going to be the bag holder. And it's something you cannot do or else you're going to end up losing money. Alrighty? Sound good? Any questions about those general rules before we move forward? Alrighty. Well, let's go ahead and dive in here with the next section, which is what makes an EGOS trade. By the way, the webinar tonight should be about 3 hours long, or the workshop tonight should be about 3 hours long. It really depends on questions. Based on how long I typically last on each slide, I know how long it should be roughly. So we're looking at 2.5 to 3 hours long for everybody that keeps asking that. Alrighty. So what makes an EGOS trade? Well, first off, EGOS stands for Explosive Growth Options and Stocks. This is something that I always get asked, Thomas, what's EGOS? Explosive Growth Options and Stocks. These are trades that are set apart because of their potential to move rapidly in the desired direction. So we're getting in anticipation of that market accelerating after our entry, or we're getting in and catching the riding the wave, kind of riding the momentum. So they're somewhat momentum plays, but we're looking for a rapid move one way or the other. Now, unlike many trades that we take, an EGOS trade is attempting to enter a position as the market starts to expand, as opposed to getting in after the market has already moved. Okay, so there's different strategies we use, sometimes things like retracement trades or trading off a support or resistance or inflections and things like that, where we're getting in after a move has already started. With an EGOS trade, the thing that we're really attempting to do here is jump in right as the market starts to run. Now, this is very important to understand. As I mentioned before, markets move through periods of expansion and compression and expansion and compression and expansion. All right, when you look at any price chart, and we're going to go through and look at a whole bunch of them later on, these are the expansion phases when the market's running, and that's where we're trying to trade. Now, when we're getting into an EGOS trade, we're looking to get in right here. And if we miss that entry, a lot of times there's going to be a bull or bear flag right there. Okay, if we do not get in on those first two opportunities, we do not get in late. We do not chase it. All right. Yes, this is recording, Helio. All right, so do not chase if the run has already happened. All right, and I'll explain how we know when the run's taking place or start or tail end of it here in just a minute. All right, now this does a couple different things for us as traders. If we're getting at the start of the expansion phase, all right, it allows us to use tighter stops. So that's one of the big things. We can get out of these positions very, very quickly. Typically, you'll see me start to scale out at about a 12 to 15% loss a lot of times on options trades. Now, remember, our winners, like the really good EGOS trades, we're looking at 300 to 700 to 1,000% profit. Okay, so we have really, really good reward risk ratios with these trades. But because of the nature of the type of trade we're taking, where we're getting in right as the market goes into expansion, we can get out very, very quickly, and we can tell when the market's not moving the way it should and how it should behave, which, again, we're going to discuss here in a little bit. It also allows us to get into options positions before the implied volatility really increases, or as the implied volatility is starting to increase. When the implied volatility, and again, I don't pay attention to the Greeks, I don't check them or anything. However, this is what allows for our gains to multiply so fast. For example, one of the trades I took today made 165% in about 45 minutes. Okay, because we got in right as it started to expand. I think it was FXE. Somebody called it out in the trading room. Somebody asked me about it, and I said, yeah, that's good. I ended up trading it. All right. I do not pay attention to the Greeks. You're saying, do you look at an implied volatility percentage or an implied volatility rank? I do not pay attention to them at all. I do not look at Greeks. All right. Period. So, but what it does, the way that this works is as the market expands, the volatility increases and implied volatility will go up which will increase the price of the option in our favor. Okay. Now, all the EGOS trades are taken coming out of a technical compression pattern, period. Right? And again, I'm trying to make this very straightforward. When I'm saying period, it's because I'm making a statement. All of the EGOS trades are coming out of a technical compression pattern. If it's not coming out of a technical compression pattern, it's not an EGOS trade. All right? Once again, what's the nature of the trade that we're trying to take? We're trying to get in as a market goes into expansion, as opposed to chasing it after it's already moved. We're not trend following. We're not buying retracements, nothing like that. What we are doing is we are trading a momentum play as the market starts to expand. The key to getting rapid acceleration in our direction is through the fundamental catalyst. So all the trades are going to have a technical compression pattern. And when you go through the intensive with me, one of the things we're going to be talking about in the intensive is how do we find these? What do we look for? How do we scan for these types of setups and stuff? But from the workshop standpoint, all you need to know is how to trade them. They're all going to be coming out of compression. And the thing that really makes them rip our direction and that supports our hypothesis is a fundamental catalyst. Those fundamental catalysts can be any number of things. It could be insider buying or selling. It could be a new report that comes out. It could be something that Congress is doing. There's any number of different catalysts that can take place. Okay, it could be something as simple as an analyst upgrade or downgrade. It could be a news report coming out saying that a company is really kicking butt on their sales numbers this year, which there was a trade we had, if you remember, Activision, ATVI. That was an EGOS trade a couple of weeks ago that we did really well on. We had 2 different trades in it that both played out beautifully, which I'll show you both what those were. But the fundamental news that came out that was supporting that trade was that there was a report that they were having their best year ever for, I think it was like Call of Duty or World of Warcraft or some game or something. I don't care. All I know is that it was their best year ever for the sales. And when I saw that, plus the technical pattern, we then had an EGOS trade. Okay. I'm not up to speed on all of their products, but I know that the fundamental news came out at the same time. And when we're looking at the news, all right, what you got to get really good at doing is reading headlines, because that's all we care about. Does the headline look good? And if the headline is correct, if it has a strong headline, that's going to push the market, because the algos are going to catch on to it, and the other traders are going to catch on to it, and it's going to run. Now, the other thing you want to pay attention to is what are the well-known companies. You don't want to go take some obscure company that nobody's ever heard of. I mean, occasionally you can, but there has to be much better news for a very obscure company than for something that is a well-known like Activision or Tesla or something else. Okay? So keep that in mind. It needs to be, the more hype surrounding that company, the better that trade's going to be, because more people are going to pile on. And what's going to happen is you're going to get all those bag holders, the chasers, that are going to take that and make it go from running like this. All the chasers are going to jump on. It's going to go like that. And we're going to be closing it because we got in way down here. All right. So the primary thing that separates EGOS trades from a regular breakout is a strong fundamental catalyst occurring at the same time as their technical setup. Now, this doesn't always happen, but what will happen is we can look, and a lot of times you can look for companies that you know have pending news. They have pending announcements coming. And when we see a technical pattern triggering, we can get in on that technical breakout in anticipation of the fundamental news coming, that catalyst coming. And the technicals will oftentimes precede the fundamentals. So we'll get in to a trade that doesn't have news yet, but that we see in an article or something else that news is coming. And then we'll catch that run because the news will come in and like pour gas on the fire. Now, we want to see the news event breaking within a day or two of the stock triggering the technical setup. All right. The fundamental catalyst does not have to occur at the exact same time as a technical breakout, although this is ideal. Okay. Now, the other thing you got to keep in mind as well is some news, when it's really big news, you need to understand which news announcements are going to have a lasting effect, meaning they're going to push it for multiple days, or one where it's just going to cause it to pump 1 or 2 days. Okay? Because For example, Activision or Tesla, those are two EGOS trades we've had here recently. The news, it was something that should help push it for several days at a time. So that means our breakout, when it triggered, we trade that, and it's still an EGOS trade when we catch the flag. All right. So you need to understand which news is going to be something that's just a pump or something that's going to have a lasting effect and cause the market to continue to run. All right. Now, Cody, you're asking, do you use about 1% of your account per trade? No, I risk about 1% of my account per trade, but the position size might be quite a bit larger, and we'll talk about scaling in and out later. What news sources do I use? There are a lot of them. I'll be discussing that in the intensive, but things like Benzinga, FinViz, Yahoo, StockTwits, there's like 15 different news sources I use. The main thing I look for, though, is Benzinga. And I have Benzinga on my TOS account, that I have that tied to the whatever ticker I'm looking at, so that it pulls up the news for that ticker at that time. I'll show you. So this here is my TOS, for example, and this is Tesla. And when Tesla comes up, I have news right here on the left. All the different news announcements that are relevant coming from Benzinga. Okay, that's the main place I look right off the bat. But again, when we start digging for things, I'll talk about all that in the intensive. Do you have an approximate market cap size for the companies chosen? Nope. It can be any. I trade everything from mega caps down to micro caps. Could this happen for an earnings announcement? Earnings are a little bit different. I don't typically like to jump in to trades pre-earnings, because earnings are a roll of the dice. What news triggered Tesla today? Tesla today Tesla was in anticipation. They're supposed to be releasing their numbers, their pre-order numbers, or their delivery numbers over the next week. So we're just in anticipation of the market rallying because of that. Are EGOS trades only bullish or are some bearish? No, they're bullish and bearish. I'll show you examples of both in a minute. Is that news Benzinga feature in TOS free? Yes. Do I take volume into consideration? Yes and no, sometimes. What if it's old news like yesterday's? Again, it depends on the news. It's different because there's an infinite number of potential news announcements that could take place. Okay, and every single one's different. All right, so that is it for this section. Next, we're going to dive into the main EGOS setups here. So let me